Hey, good day, people. Good day. All right. I'm just going to go over a couple pairs. I might even look at some stocks. I'm not sure. But let's get into it. We're going to today focus on identifying the Fibonacci levels. And we just want to see if the 61% level of a retracement has indeed played out on some of these pairs. So up first, we got the Euro USD. I've already drawn my fib level, and I could draw it again for some of you guys who haven't seen this, but I'm using the Fibonacci retracement tool. All right, and we're gonna pull it across, and we're gonna put it here, and voila, here we have what? We have our actual 61% that was actually met. Okay. All right, so we see right here, 61%. We're good. So what does that mean? All right, so let's look at this. We got some form of a head and shoulders pattern that basically formed or whatnot. But what we want to do is we want to look for a price to cover what, the 23%. We did get that. It crossed the 23%. All right, we get it right here. And then we got another candle, and we're on the 1 hour. It comes back above on the 23%. So they give us a high probability that we're looking to do what? Go to 61. And that indeed is what happened. So this was a successful trade. All right, if we was looking to take this trade at the time, let's say we find entry here, get down here. It's a 108 pip move. That's really good. All right, so let's go on to the next one. Let's look at Euro JPY. All right. So currently I am in this trade right now. I'm looking for it to come back to the 61, but I want to show you the other side of the trade. All right, let's take this stuff off. Okay. So we did a retracement based off a bullish impulsive move. Now we're going to do one based off a bearish impulsive move. So we're going to take it from the top here, and we're going to take it all the way down to the bottom here. And we're going to get our retracement levels. All right, we're looking for what, 23% to be crossed, and we want to see price either retest or come back below here. We do get the retest. All right, so we really get it. Yeah, here we got it right here too. A couple hourly candles, but we do get it. All right, it gives us a high probability we headed to what, 61%. What do? We get to the 61%. All right, and we even go up to the 70. All right. Now that can happen, but I like to focus on 61. So if we was taking this trade based off this impulse move, we want to try to get back to the retracement levels. This is a strategy that we can use to take advantage of that. And so if we're looking to enter in around this area to get back to this level, it's 558 something pips. That was an excellent move on that. All right. Let's see. About gold. Let's look at gold. We can take it from here up here. All right. What do you notice? Boom, 61%. Gold would have hit, which this was what would have been on last Thursday, I believe. Yeah. Um, Same concept, guys. What are we looking for? Price to what? Cover that 23%. If my internet looks, shaky, I'm sorry about that. We get across, we come back down, we come back above. You find entry on that above. I'm gonna take it down to the 61. We get to the 61. That was success. All right, so we get out of here. All right, we can see where we currently are now. In this particular move, this is an impulse. So let's see what we're doing, what we're trying to get to. And essentially, we done hit this twice. So trading gold, you could. So what we want to do, we want to wait for the impulse. Wait till the impulse. Wait for some type of market structure to play out. That's another strategy, guys, that you can use. Wait for market structure, because this is what happens. most people when they trade, they see something like this. Right. So you look at textbooks. This is what it looks like, right? You know, things like that. You know, whatever, right? So this is what you really think. You think that, oh, it's an impulse supposed to just come straight on back down. Nah, look at all this choppiness, man. It's a lot of price action up in there just moving around, right? And even if I, start spreading this thing out even more so you can see, look at this. And it's just the hourly. So if I go down on a lower time frame, it's going to be even more candles, guys. So this is a lot of stuff that's happening here. But what do we get? We get an impulse. We get this impulse right here. When you get the impulse, what are you doing? Nothing. Even with some of these little drops, all right, you may not do anything. But if anything, you're waiting for what? Pull back to key levels. These are pullback key levels. This is a supply zone right here. But watch this. I can do a fib within a fib. All right, let's go back and let's do a fib just on this move right here. And let's just act as if, we have this in place, right? All right, we got a drop, and I'm doing my field levels. All right, and now if I want to find entry, I want to enter anywhere from at minimum a 61% between that and a 78. So if price comes back into this area, this is where I want to find my entry. Okay, so I could put something big like this. All right. So some people, when you say, "Well, why this zone is too big?" Like you need something more concrete, right? Well, you can just have a rule that if price get in any of this box, you're gonna take it. And it may come there strong, it may come there slow. I don't know, but let's say that price comes in and then it starts moving up. You may say, hey, my first entry is going to be light. So I may scale into the trade and compound it. So you may build a cumulative position from up here, right? And then look, if we want to, we still can do what? We can do, it didn't do it, right? We could do a fib extension, guys. So we could do a Fibonacci extension based off this impulse. And then that can give us, downside targets. Okay, so we get our downside targets. This is a target zone that we can use. Okay, we can take this off. We got targets downside. When we get down to this area, now we can take all this stuff off. And this is how it will look in real time. Let's play. Price got into the box, so we found an entry. Our target's a hit. Simple as that, right? So now you've seen I use the Fibonacci extension tool and the retracement areas. So voila. You see all that in some form of range bound. Okay, so now we're in a huge range at the moment where we have all of this. So if you're looking on a higher time frame or so, you may see something else. But right now, I can tell myself, like, I'm not really trading. I'm not doing anything right now. But if I wanted to, I go off the what? Impulse, because this is an impulse. So I can play this level. I could either wait for price to come back up to retest, or I could maybe try to trade the retracement level. But I now have to respect that these levels are very key, and if this impulse could point to the downside. Now it's going to be plenty of times you have an impulse and you don't get to the 61%. That's normal. You're probably going to be in an uptrend or a major trend. All right, you're going to have some higher highs, higher lows, or lower lows and higher lows. So regardless, right? So sometimes it's going to pull back even further. Like for instance, this is a good one right here. You got a nice little impulse to get some consolidation up there, but price never what? It looked like it wanted to clear here, but it didn't. We didn't get no downside. So this wouldn't have worked. That's a no trade. All of a sudden, we get an impulse here, and then we get a what? Pullback. You got structure here. Boom. All the levels are basically hit, right? You got 61 that was hit right there. Now watch this. For whatever reason, let's say for something, so you said, well, look, the 23 wasn't even hit. Well, look what happened. We get down here, we get back up to the 23, cross it again, then we go even deeper. So the trade would have worked out. All right, so that was gold. Let's look at Bitcoin. All right, we're going to take it from here. Same thing. Crossed over, came back above, looked for entry. We just going to 61. We blasted through the 61. Let's do a fib within a fib. See this drop? It's an impulse. So let's do the impulse on here. Could have found what? Trading opportunities. What are we looking for? We got the impulse. We're looking for price to what? Cross over that 23%. And then we're looking for what? Price to come back below. And we get that. We get above, we come back below. We went to the 50, we came deeper back. Now, this would have been a little bit iffy, especially if you had a tight stop loss. You'd probably been in a profit, then you would have been in a drawdown, and then it went. So this probably would have been frustrating. So depends on how you set up your stop losses. You may have got a hit. You may have just had it, left open. Who knows? You're not gonna win them all, so it is what it is. But 61% was hit. Let's look at USD JPY. All right, what do we have? We got this nice little move to the upside. So we can measure that. We got some structure. We got something. All right. What happened? We crossed 23, came back a little bit above. We pushed on down. All right. And eventually we got to 61. Easy on that, right? But watch this. We can go up. We can go down. We can do the same thing. We can reverse this thing. We got a nice impulsive drop. All right. We get above 23, spread it out so you see. All right, we pierced above, and then we came back. All right, so we're looking for entry. Now, here it is again. You may not get to that 61%. So once again, you can adjust to play it by ear. Look at this impulse. We get a little bit past the 38. We didn't come down to the 61%. So if you were just a guy or gal that's like, hey, if it don't, it has to come in this area before you take trade. Well, then, you just miss it. That's fine. It's not like saying it has to, but you may look for other ways for you to take a trade. You may look for engulfing bar. You may look for what do I want to say? This candle to be engulfed, and that's when you would take the trade. So it's other ways. It's not going to be a one size fit all. But you can go inside and look at these impulses, and you can see it playing out over and over again. What do we have? 61%. 61% impulse, right? You get above, all right, look. We dip. We want to wait for what? We got to wait for price to come back above the 23%. What happened? It came back above the 23% right there. It gives us what? A high probability we're going to go to what? The 61. We get to the 61. Boom. How many pips that could have been, right? If we find some entry up here, we get down right here. That's 185 pips. Come on, guys. We can do this. We all can do it. But we're all not doing it. And we all won't do it, but we can. It's something inside of us that's just really, really, really just wrecking havoc. Some of you are trying to trade to replace 9 to 5s, to retire right now. It's not the way it goes, guys. Like, hold on to your 9 to 5, keep trading, you'll be good. It's basically the same setups. So a lot of times, if you see some of these same setups, guys, it can give you some good indication to take another trade that's similar. You know, look at this drop, range drop. You know, we got this rearranging. Are we maybe get another drop, or are we gonna push higher? I don't know, but you see it. I don't feel like doing the fibs on this because it's the same type of setup which I've probably already seen. So I'm trying to look for another pair. Let's look at something like Australian, Canadian. We saw something similar like this with gold. All right. Oh, that's another thing too. If you trade Australian dollar, like it's tied to gold. The currency is tied to gold. So if you look how this looks, gold probably could look similar. Let's see. It's not gonna always, but it's a possibility. So that could give you an advantage. One could tell you what the other one's going to do. So if you look here at the bottom, this is gold at the bottom. This is Australian versus Canadian dollar at the top. So it looks kind of similar, right? You see this setup. You see the setup down here. You know, it's sort of the same. So if you actually want to look at some correlations on it, all you have to do is just go in and really study and see. And you never know. Australian dollar may give a signal to do something early that gold, or vice versa. But that's you just really diving deep and trying to figure out those correlations. So I'm just giving you some keys to the answers to the test. All right. A little Bitcoin. Let's maybe look at a stock. Let's look at NVIDIA. All right. Everybody likes NVIDIA. All right. Let's go ahead and look. All right. So we're going to look at we're going to do it from here. We're going to see where we are at field level. All right, so we're still in the infancy stages of this. All right, we all know if this 38 is broken, of course, we know we got 50. Now, here's where I see a gap down here, and it's close to the 61%. If price were to start breaking and stair stepping down, this would be a key area. We get to the 109. That's something to look at. Now, here's what you want to keep an eye on. Now, we haven't gotten back above. We touched it. We haven't gotten back above the 23%. All right, so that's what you will keep your eye on, because we could come down here, but we may see something where we shoot back up here, okay? And what is this typically going to do? It's going to get rid of all the bears, all right? And then while it's shooting back up, everybody who's shorted up here, they got to cover their shorts. So it may add some more buying pressure up here. And then you may get a bull trap to come into the market. And then eventually that basically just gets us up into this area. And then we start stair-stepping and get back down here. That's a possibility. But once again, I'm not going to know. But what I'm paying attention to is I'm not entering this trade right now. Most people just go ahead and go short here and then get no. Okay? So I can go ahead and somewhat anticipate that if we're going to have that, let me go ahead and just do the fib levels. All right? Now watch this. We crossed the 23%. We're back below the 23%. If I was in trading NVIDIA, I ain't gonna lie, I probably looking to go long and just trade the fib levels. Where I want to go to the 61. So I look for entry, take some option contracts out. We're going to get back up here, maybe get to 125. Now, think about it in the grand scheme of things. When you see something like this, all right, this little drop, it's consolidating. We're thinking, we got gaps down here. We got this. Look at this candle with this long tail, which means that that's a huge imbalance, right? And then it's a fair value gap candle right here. So you definitely thinking like, oh man, we're going lower. But we all know the game. It's about you know deception in all of markets. That's how liquidity is provided. Okay, so never forget that. So, like I said, if it was me, I and this is not financial advice, so don't go in thinking, oh, Eric said go long on the video. Bruh, no, I don't know. It could be wrong. So it is what it is. But that's my rationale, and just give it to it how I'm thinking. But we clearly see, all right. You see, look right here, it's down, press up. So let's do this. Let's just take this move right here, and let's see how much it retraced. It may not be enough. All right, look at this. It got close. It didn't do enough. Well, I just really got to the 38%, and then it dropped further. Let's do another stock. I think somebody said Kavana. Is it Kava? Is it Kavana? Kava Group? What is this? Kava. Oh, no. It's restaurants. What is Carvana? Here we go. Same thing going on. It's really not much, but let's do this. We'll take it from here. Yep, 61%, man. All right, we get up here. We drop below. We come back. Look at the bulls. The bulls are doing what? They're coming in, but this retail, they got trapped. And we drop. All right. So you see how these fibs, it doesn't matter. We did a crypto. We done did some Forex. We done did commodities with gold. We did 2 stocks. All right. You see it working. Okay. Impulse. All right, we hadn't got to the 61 yet. We're trying to. All right. So watch this. Typically, when it starts happening like this, I can turn it around. Hey, I'm gonna measure this impulse, and I want to see what we're doing on this. And these are levels that we visit. We broke 23. We came back below. And are we stepping to get back to the 61? Maybe, maybe not. But it's worth the shot. Of just playing that game over and over and over again. I don't know why my data taking forever to load. The rest of it. Look at one more and we're done. All right, what's one we want to look at? Maybe look at an altcoin. So let's see. I guess Solana, since that's the talk of the town for a lot of people now. All right. All right, let's do this drop. So this is from July. Then on August 5th, get the impulse, we move, we good. All right. Now on this one, all right, on this one we did not come back below 23, but we did hit 61% area and broke. Once again, could have been a no trade. So if you stick with that rule, it's fine. You're gonna miss it, you miss it. Who cares? Don't get upset. It didn't hit your. It didn't work out. It was your trade setup. That happens. So stop trying to force trades. All right, here's the thing now. All right, look. So we're across this 50, 61% look like it's the next likely level. For Solana. Nice little price action that's setting up. We get some lower lows and lower highs on this little particular mini little downtrend that we have right here. All right, so we are trending down. All right. In fact, let's take this off. Let's do this. So we got a low, lower high, lower low, lower high, lower low, lower high, and we got a lower low, and now we're in the current lower high. That's what you want to see, right? So what are you looking for? You're looking for entry back up here on the lower highs, and then you want to take that to the next level. So if you're using leverage, you could be looking for shorting opportunities on SOL on the leverage account. All right, so that's it. Y'all just look. We just really went over the Fibonacci retracement. I didn't go over no extension, even though I did one extension. But I see this could be a powerful trading tool that you can use if you're not familiar with it. It's right here on your trading view. You just click over. You got the Fib retracement level. You can pick that. And of course, the trend-based Fib extension to get your targets. But yeah, go, check that out. Play around with it. All right, so I'm gonna do another video probably today too, just going over potentially some double tops and double bottoms that was probably found in the market, and I'm probably just gonna use the 4-hour time frame. Just show that look, money is there. It's all around us. It's just that we get so distracted, we don't get locked in, and we miss opportunities. All right, but we gotta focus on getting our mindset, together. I know that's one of the most difficult parts to this. You could get all the free content. You can take courses. You can do all that stuff. It does not matter if you don't overcome that mindset. If you don't stop with the self-sabotage. You got to dig deep. Do you really, really want this? Or do you want to continue creating the reality that you're currently in? And if you love that reality, then by all means stay there. But I know for me, I'm be sick of my shit. And I'm not doing that no more. It's your boy E. White. I'm out. Have a wonderful weekend.